Welcome to Money Matters with Greg, where we dive into the money conversations shaping your life. From investments to estate planning, insurance to taxes, we cover it all with a fresh perspective. Join Greg and his guests each week to get inspired and take control of your financial future. Let's get started. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.
Hey, good afternoon. It is Greg Farrell, CEO and owner of Farrell Wealth, and the show is Money Matters with Greg. We talk about money on this show. It's been a hot minute since I've produced a new podcast. I wanted to talk about what's been going on in the market as far as February goes, the new year, 2026, and it's just a number of different things. It's crazy as far as the movement in the markets. Had a really solid January, and then everything kind of retraced, and then ultimately here in February, it's pretty much flatlined. A lot of earnings have been coming out, and I just want to talk about some things. Again, we broadcast on WVLP 103.1 FM. Thanks for having us and listening to us here at 103.1 FM in WVLP in Valparaiso, Indiana, locally, and then also podcasting anywhere you can find your pods, wherever you pod, you can find us as well. I think we're on now 178 as far as episodes, 178 episodes, and going to talk about some things just because the markets had been just volatile, and I just wanted to update everybody as far as the market recap. We talk money on this show. We try to help you out with this, your lives, as far as adding value to your lives and adding some money tips, some ideas you can help save some money, and then also obviously your investments. Talk about the S&P and overall asset classes that you can ultimately be involved in. And that's ultimately what we're going to talk about today. The show is broadcast live on Thursdays at 1 o'clock, and then also replayed as well on Saturdays at 1 o'clock on WVLP 103.1. But then also, as I said, anywhere you pod, be happy to check it out. And if you want to contact me in any way, greg@farrellwealth.com is my email. Please feel free to reach out at any time. All right, so little market recap. Like I mentioned, January was volatile. Sorry, I've been a little bit out of pocket in regards to the podcast. We've been very busy with Indiana University winning a national championship. Been traveling all over, trying to enjoy the festivities that has been a natty, because this is all new to us, and we've been having a lot of fun with it. But we're back at it here and ready to roll and try to help you out throughout 2026. I wanted to talk about see a little bit of volatility. You've seen a massive volatility really in the first month. Stocks have remained volatile just last week amid a number of signals that the latest economic data, and then also AI disruption that has really sort of spread this angst to non-tech sectors as well. The S&P fell 1.35% for the week and is completely flat year to date. So up in January and then down here in February. But equity markets began last week with a really flat open. Mondays, traders sort of weighed what was going on in Japan with the LDP party, their landslide, and their big political victory that really bolstered stimulus expectations in Japan. We'll be watching that, and we'll be reporting on that as well as what we see in regards to Japan. But stocks did begin to get a lift last week, really after the New York Fed's survey of consumer expectations revealed a significant and favorable drop in inflation expectations, sparking a risk-on money flow for sure. The S&P 500 added 0.47 that day, and that was really solid. And then kind of going into the other things that was Monday, Tuesday of last week, the delayed. The December retail sales report came in weaker than expected, and that was really sort of adding this dovish flow into bonds. So it immediately flipped from risk on to risk off. And then this AI disruption concerns prompted a wave of rotational money that just kind of moved out of the old economy stocks. Um, Sort of we saw them kind of outperform many of the big tech names that traded lower. And that's dragged the S&P down 0.33. So back to pretty much being, even for the week. Wednesday contained a big economic release of the week via the December jobs report. It was better than expected, which is great, and reinforced the current kind of Goldilocks economy. Although it failed to really spur any rally in the S&P 500, it finished the day basically little changed. And then Thursday, volatility picked up in earnest on Thursday with the sell-off in big tech names again, intensifying that back to the soft margin guidance of legacy tech, the Cisco's, with management citing surging chip prices as critical negative influence and really on their overall outlook. Um, and that corporate news paired with the jobless claims and the existing home sales reports, both missing estimates, weighing heavily on the market, and the S&P ended near lows down 1.57%. Stocks fell to their lows the week shortly after that on Friday, despite the solid earnings from semiconductor manufacturer AMAT and a favorable January dip in the headline. The core CPI figures released ahead of the open were marginal at best. So the market was quick to release kind of steady as dip buyers stepped in to defend that 6,800 level in the S&P 500. But that bid was certainly tentative, and the rally really lost momentum in the afternoon, leaving the index to close just up 0.05. So, a negative week last week, again, a negative feeling and a negative sense for the month of January or month of February. And now that we're, basically gone 2 months here. Um, into the year, and we are unchanged as well. We have a number of weather issues nationwide that are going to affect travel. Certainly, these storms coming into California with all the feet of snow that are happening and the rains as well. We'll see how that affects the economic numbers coming up here into the next week or so. But that's kind of an update from February. It's now February 17th, and we'll be broadcasting this show on WVLP here on Thursday, February 19th at 1 o'clock. Just sort of an update from the last week and where things are. The S&P 500 is right around the level of 6,800. The US dollar is trading 97.12 at this moment. Gold is in and around 5,000. And crude is around $62.50 a barrel. There's been some issues, obviously, with geopolitical issues in Iran that have rallied oil as well. The 10-year yields right around 4.02. So you're also seeing some mortgage rates come in that have been new to the world of the markets, as well as some excited realtors out there. I know in Florida alone, and just talking to a couple of people down there just today, that people are seeing below 6 on mortgage rates. So that's interesting to see where that might take us as well as far as rates, and where a rate cut. There is a higher probability of a rate cut in June, but not until then. So we'll see how that looks. Here we'll be filling everybody in on that and keeping everybody abreast as well, um, in regards to mortgage rates in the future. All right, the show's Money Matters with Greg, and Greg Farrell, CEO and owner of Farrell Wealth. It's a wealth management firm locally based in Valparaiso, Indiana, but also serving clients in 24 states nationwide, managing money for clients and high net worth individuals and families, and also a number of different business owners and 401ks, retirement plans, you name it, and helping out many different types of people throughout the nation in regards to their money. And we're happy to help you today, try to add some value and kind of update you in the markets. And then also, I want to go into the tech world of exactly kind of what has happened with the AI conversations. It's been up and down. It's been a ton of different information. It's moving extremely fast. And I wanted to make sure you knew kind of what's been going on with tech here in 2026. And, AI for the last 3 years has really been a tailwind to the market. It's really been behind a number of different companies doing extremely well and pushing forward towards great earnings, high investments, and multi-billion dollars and even trillions of dollars of reported investment that seems to be intentional and seems to be um, certainly the future. And many of these earnings reports from most of the companies that are investing in AI have big numbers that they plan to invest. Now, really, the biggest event of 2026 so far has been the fact that the AI market related news has really transitioned from being this consistent positive for stocks to suddenly becoming a headwind, where it was a tailwind before, is for sure a headwind. And as concerns on the sort of the return on investment of AI and spending by major tech firms, and basically the potential AI disruption of various sectors has really kind of pressured stocks, not only last week, but really since November of 2025. And given the focus on AI and recent market volatility that's been crazy, I just wanted to take some time to kind of tell the story of what's happening with AI in plain English, because I know investors, want to talk about what's going on and what's going to happen, and certainly we follow it. Want to explain it the best I can explain it in a simple way, and I really believe the story will help you first off by explaining why tech is weak, and then why the market is volatile for sure, and then also what's next for AI, and in doing so, kind of impress just some ideas that might help you along the way to kind of follow the story and where to invest and how to invest in this wild ride that is AI that's constantly moving. But before we really explain what's changed, I really want to establish like an important context here for the past 3 years, like I mentioned before. Even since the AI bull market started, investors have really viewed AI as a universally positive for stocks, and it's been very, very good. Specifically, that AI was going to one, boost productivity, and two, increase corporate profits and really be a positive for corporate earnings overall. And that's really why the sort of simple mention of AI at times, with a build out integration, and yes, we're using AI, were positive catalysts for virtually any stock in the market since 2023. Everyone was coming out with their new AI widget and gadget, and we're using AI for this and that, and of course, their stock would be reflected as so, and usually move to the upside. But it really, in addition to that, the investors had the view that no amount of money spent on AI was too much, because it was just all viewed as money that will grow and earnings, and it'll show up in the earnings column, which of course we look at all the time. And it is very important that we have an earnings number that we need that we are satisfied to be able to invest in individual companies. But the more a company spent and on the build out of AI, the more they would grow, was the idea, and the faster the stock would appreciate. And the peak of this really just kind of came in September of last year. So let's go back to 2025. And this was highlighted by the huge 30% daily rally in Oracle after it revealed just this massive backlog in orders. And, you know, however, like things kind of softened, and then into October, and immediately following those Oracle results, sentiment for AI just sort of began to change. And before it was no amount of money is enough, and earnings will be fine. But then, wow, are you sure you're going to put $100 billion into this? Or even a number of companies have said they'd invest as much as OpenAI said they would invest up to $1 trillion. So investors kind of began to question exactly how this is all going to work. And with OpenAI, it doesn't really, what if OpenAI doesn't really spend all the money is my first problem that we want to talk about. So on further review on the Oracle news, the Oracle backlog was almost totally attributed to one company in the OpenAI, and OpenAI, which was created by ChatGPT, had committed to spending $1 trillion with various AI infrastructure tech companies in Oracle, NVIDIA, ABGO, Microsoft, and many others. And expectations of these payments and these massive earnings growth would provide, keys to fueling huge rallies in the major tech stocks, which coincidentally powered the markets higher for most of the last of the 3 years. Now, that meant part of this tech-driven bull market was almost entirely attributable to the commitments of just one company. So, what would happen if AI couldn't obtain financing to make those payments in the future? Or what would happen if another competitor began to take market share and hurt ChatGPT? In that case, the gains in many tech stocks would be premature for sure, and those stocks would see multiple contracts um, as expected earnings growth that just would never materialize. So it's a bet for sure. But what if they don't spend the money that they say they're going to? The next blemish that we're seeing that I want to be able to mention is Gemini. In November, parts of those fears really kind of all these fears about spending were kind of realized, and Alphabet realized Google. They released an update, and it's AI named Gemini. But the update was so good that based on many texting metrics, Gemini now outperforms ChatGPT. And this was an initial catalyst that kind of shook the positive AI mantra, and kind of here's why. First, Gemini takes market share from ChatGPT, and then OpenAI may not have the money to fulfill the $1 trillion in obligations made to many major tech companies. That means lower multiples and declines for the AI hyperscalers and infrastructure names like Microsoft, NVIDIA, Oracle, and you're seeing it in the software stocks too as you get hit. So what happens if Gemini outperforms ChatGPT? And then second, Gemini is being built on Google's proprietary semiconductor. So this is a big deal because the reason that NVIDIA, Broadcom, Taiwan Semi, and others have exploded in recent years is because of the demand for the semiconductor chips. And as they are necessary to build and build out all these LLMs that are necessary for infrastructure. And Google making their own chips implies the demand for chips from NVIDIA and Taiwan Semiconductor may be less than expected. So that means less earnings growth, lower multiple for semiconductor stocks. And then finally, if Google can take Gemini and make it as good as ChatGPT on its own chips, then others are likely to follow as well. And the fear is that AI becomes commoditized, making trillions of dollars in AI infrastructure investment just foolish. Um, so basically, Gemini kind of broke the idea that all of the money spent on AI was good and that money would result in earnings growth immediately. And it's really sort of, in essence, ushered in sort of a scrutiny on the AI CapEx spending, and altered the paradigm of AI tech stocks that currently exist in. So practically, that means that it's no longer the case that a company that spends the most on AI infrastructure wins. And we can see that the market reaction and the collapse, really in this mega cap free cash flow that has affected overall investment in recent weeks. So here we are at Money Matters with Greg. I'm Greg Farrell, CEO and owner of Farrell Wealth. It's a wealth management firm locally here in Valparaiso, Indiana, and then also helping clients nationwide. We're talking about the AI infrastructure right now and what's going on in the overall markets, and just sort of updating everybody on some of the fears that are going on. And I've gone through the first two here on the show. Again, we're broadcasting on WVLP 103.1 FM. Thursdays at 1 o'clock, and then repeated on Saturdays at 1 o'clock. Locally, you can also find them on TuneIn Radio. If you want to listen to the radio, but you can also find us anywhere we pod as well, Apple, Spotify, you name it. So I've gone through the first two things that worried about OpenAI being able to spend this money, and then what if Google competes with OpenAI and then starts beating them out in regards to quality on their own chips. But the last thing I want to talk about, the third problem, is this concern about cannibalization. And this is really the concern that has emerged more recently as AI advancements have created worries that AI will disrupt not just white collar office jobs, but also the entire industries that are really integral to the markets. And the fear is that fear is why like Claude Cowork and Claude Legal crushed software stocks 2 weeks ago, and why the brokers um, were hit so hard last week. So that fear is why Claude Cowork and Claude Legal crushed these software stocks recently and 2 weeks ago, and just why the brokers and transports just sort of they were hit as hard as well. And these fears that are erupting that AI will disrupt the entire industry and overall industries, and that those AI anxieties and those fears really spread beyond tech and are negatively impacting the rotation trade that's really supported stocks since October, where no sector is safe from fears that AI could disrupt it. Because, again, before it was talk about AI and you're doing great and your stock will be reflected as such. Now, if you're investing in AI, everyone wants to know about the return on investment and are you spending money wisely? So here's an overreaching point we kind of need to understand in this entire thing. So the bull market of the past 3 years really is driven by two factors. One, increased earnings expectations as tech stocks and tech companies massively grew profits amidst this surging AI demand. And that hasn't stopped. It's still there. So, you're still talking about growth for sure, but it's something to watch. And that's what's been driving everything the last 3 years. And this multiple expansion as investors really, this idea of investors viewed AI as a productivity boosting machine for all industries, leading investors to really kind of pencil in the future earnings of growth. And when you Gemini, cannibalization, over resilience on OpenAI, and other recent AI headlines are really eroding all of these beliefs in multiple different ways. And for this to stop, we really need proof, proof element to kind of appear and show AI CapEx is generating this positive ROI, and then AI will not destroy all entrenched industries. Recently, Elon Musk came out with a post on X about how the trades are safe for multiple years, but many of the things that have to do with anything to do with the screen and output from the screen are going to be challenged by AI and professions as such. So you look at a career of going into just recently becoming an expert in coding and being an expert coder, and how's that looking now? And so trying to find these industries that will be enhanced versus taken over is really kind of what we're all trying to figure out right now, and hopefully not destroy entrenched industries, but actually just encourage and add more productivity and make them more efficient, more productive, and boost earnings, of course, is the key. So until we get that, really that catalyst or that growth element, um, you can expect sort of this mixed sentiment and elevated volatility for the next few weeks, if not the rest of the year, to see where these things all kind of come about. But I wanted to make sure you guys all were aware of this, and this is why I bring it up here. The show's Money Matters with Greg. I'm Greg Farrell, CEO and President of Farrell Wealth. It's a wealth management firm helping clients all throughout the nation with their investments and their estate planning conversations as far as financial planning and their lives in regards to their dollars and cents. So that's why we talk about this show on this show. We talk money on this show, and hopefully we're able to help you out today with some ideas on not only what the market's been doing in the last week or so, but then also what we're seeing in regards to the AI world as well. Again, thanks for listening on the WVLP 103.1 FM, and then also anywhere you pod. It shows Money Matters with Greg, and we're just thankful to have you with us. You can find us on YouTube, on our YouTube channel. And then if there are any topics you want to talk about, please just email me, greg@farrellwealth.com. And with any questions or concerns, and I'd be happy to try to address them and talk about them in future episodes as well. Thanks again for being here, and we'll catch you on the next one. See ya.
Thanks for tuning in to Money Matters with Greg. We hope you gained some valuable insights today. Remember, your financial journey is personal, but you don't have to go it alone. If you enjoyed the show, be sure to subscribe and share. Until next time, here's to making your money work for you. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.